Hi there, Mariette back with another 17 Hats video, and this time we're going to talk sales taxes. So let's first look at an example of an invoice that includes sales taxes. So inside of 17 Hats, you can create invoices, and your invoices can include sales taxes. For example, here's an example of an invoice for $100 with a state tax of 5%. Which is $105. And so the revenue for this invoice is reflecting $100, but state taxes were collected and will need to be remitted to the state agency. So let's go back a bit and explain this. When you're inside of 17 Hats under account settings, there's an area called tax settings. If you need to collect and remit tax to a state agency or locality, you'll want to go ahead and add a tax rate into this area of sales taxes. So that way the sales tax, whether it's a state tax or a locality tax, is available for you to use on your invoices. Once you've created that item, then you can always edit it as well. Also, once you've created that item, it will now be available when you are creating an invoice. So for example, if I come back and edit this invoice, you can see here I have a state tax option that I can turn on and turn off. I also can add a new item if I'd like. So again, I'm going to click this back on, and you can see the state tax is being calculated. If I turn it off, you can see it's been taken off of the invoice. But since this is an invoice that was already created, I'm going to keep it as is. And let me go ahead and come out and now show you what that looks like in the bookkeeping module. So in the bookkeeping module inside of 17 Hats, you can see that there was an invoice that was sent to the customer. They paid the invoice. And what 17 Hats bookkeeping does, it splits up the transaction from $100 of gross revenue and $5 of sales taxes. Now that's very helpful because you will need to know what your sales taxes are so you can pay those sales taxes on a monthly or quarterly basis. Now, how will you know what to pay on a monthly or quarterly basis? Well, to understand that, we're going to go ahead and look at reports. So when you go to reports, you have the option for profit and loss, upcoming receivables, age receivables, client sales, and product sales. Let's first focus on the sales tax report. Let's look at this year to date. And there is $105 sales, and here it shows $100 of it was taxable, and the tax was $5. And so for this particular quarter, I would need to remit $5 of sales taxes. But it's really cool that it separates the taxable gross revenue amount versus what you were going to have to collect and remit to state tax. So that way you know what that's going to look like on your sales tax return. The last thing I wanted to show you here under reports, if I look at my profit and loss report, and I look at that report as of this year to date, I'm only going to see the $100. And that's exactly what I want to see because the $100 is the gross revenue I'm reporting. And the $5 is actually state taxes. And that's not considered gross revenue. And it's also not considered an expense. It's considered a liability. So all I should see here is the $100. Ultimately, I want to make sure I'm only reporting the income, not the sales taxes. So that is getting correctly populated inside of your profit and loss report. Again, another win for you here using the 17 Hats bookkeeping feature and the 17 Hats reports. And that's how sales taxes are getting posted inside of 17 Hats. Hope that was helpful.